Maharashtra-based Bajaj Healthcare engages in manufacturing of active pharmaceutical ingredients, that's APIs, intermediaries, finished formulations, and also nutraceuticals. Now, the company has achieved stellar growth in H1 FY21, and that's despite the pandemic year. In our Ideas for Profit today, we'll discuss if the stock has potential for further growth from here. Well, Q2 revenue numbers have been spectacular across all business segments for the company as the pandemic has triggered a surge in demand for key products of the company. Net profit also soared more than 5 times from 3 crore rupees in Q2 FY20 to over 20 crore rupees in Q2 FY21 on the back of sharp expansion in the operating margins. Now, for FY21, the management is also targeting a top line of 700 crore rupees from 410 crore rupees seen in back FY20. Also, the growth will be driven by new product launches as well as the ramp-up of the manufacturing units as well, which the company acquired last year for a total consideration of about 82 crore rupees. Now, these assets have a combined capacity of 172 metric tons per month and comprises multiple API manufacturing facilities as well, and the engineering units which are capable of manufacturing bulk drugs, APIs and intermediaries like mefenamic acid, artemether, etc. Now, besides, the company also has participated in the government initiated PLI, that's the Production Linked Incentive Scheme for the manufacturing of bulk drugs. Now, interest expenses have also shot up in the couple of quarters that we've seen in the past on account of increase in the long-term and short-term borrowing to support the growth in the top line recently. Now, while the return ratios have been hovering in the range of about 13 to 17%, the cash flow conversion has been fairly moderate due to capital intensive nature of the business. Also, when you see, the leverage is reasonable with net debt to EBITDA of 1.2 times, and also the cash flow from operations in H1 FY21, they all stood at about 20 crore rupees, and that's despite the liquidity challenges across India Inc. Now, in recent years, the company also has expanded its business scope by strengthening its R&D team and also the extending of its presence across the manufacturing value chain from intermediaries to finished dosage formulations as well. Now, the company has already introduced 5 new molecules in the year 2019-20 and is now looking at launching 7 new products in intermediary segment as well in the next couple of years too. Also, simultaneously, the R&D team is also working on a pipeline of molecules which are nearing the patent expiry as well. Now, stringent quality control measures and also the operating efficiencies have helped it receive GMP approvals in European and South Korean markets as well. Now, post these approvals, the company has expanded its presence or expanded its geographic presence in major regulated pharmaceutical markets as well, with exports contributing around 23% of its revenues in the last financial year. Now, generic drug makers have also been under pressure. That's due to government interventions and also the significant competition from the competing pharmaceutical companies. However, Bajaj Healthcare's track record has actually been quite steady and the company has fared well, and that's despite the challenges that it has faced and also the pricing headwinds. Now, going forward from here, the company is expected to see an acceleration in the earnings growth, and that's due to the focus on the high margin business and the robust drug pipeline as well. Now, despite the run up in the last 12 months, the company actually continues to trade at a valuation that can actually drive significant long-term wealth creation for shareholders. Also, if the management really executes well, the market will eventually reward it with a multiple much higher than the current levels that we are seeing. So therefore, investors can definitely keep the company on radar as the stock is available at potentially appealing valuations of about 10 times FY22 estimated earnings.